hearing will come to order. Appreciate everyone's patience while we conclude the floor votes, and we'll move right into questions, and I'll yield myself 5 minutes to begin. Certainly, the numbers are pretty staggering when you think of a tax cap of almost $400 billion, even after netting some recovery of taxes that were not properly paid. When we talk about taxpayer identity theft, fraud, the fact that we have hundreds of thousands of Americans being victimized and again, billions of dollars at risk. So, the issues that we're trying to address today are real issues that are about real money for the American people and about trying to protect American people as well, either that they're not paying $3,400 of somebody else's tax bill or they're not being victimized by criminals. Starting with the area of tax, the tax gap, and Commissioner Miller, I guess just a kind of a structural question or framework is the data we're looking at is 06 data. We're in 012. And so and I think prior to that it was 01, 5 years back before we had similar data. One is there a plan that, this year you're going to update it again, 5 years, now it's 6 years, to update the data about the tax gap? And what is the difficulty in having it be more current? Because having 6-year-old data certainly is helpful, but it wouldn't be as helpful if it was 1-year-old or 2-year-old data.
So I think that's right, Mr. Chairman. But it is the process has been to do examinations. So, for example, if we were to do 2011 year, those returns are now coming in. It would be a while before we would do our statistical sample. And using 1040s as an example, we're doing 14,000 sort of research audits per year to try to update this. So it's a continuing path we're on. It will be a while. It will be a few years before we complete those audits, before we're able to roll up the information with respect to those audits. 2006 is a long time ago, but I'm not sure how much better we would be able to get. I think we'll have an easier time going forward than we had in 2001. We did a better job in 2006 with better data, better estimating models. And we'll get more current. But I don't think we're ever going to be, it will never be the 2011 gap is as we sit in 2012.
Yeah, and I certainly don't expect that here in 2012 we could look and say in 2011 this is what the tax cap was. But it is the fact that it's 6 years old data that we're still using, and especially with technology. And I guess your answer concerns me a little bit is that we're still doing audits, and haven't really compiled and completed and compiled the information from audits from 06.
06
well, 07 or 08, so 4 years back, 5 years back, that we still have that. Because I think that's one of the issues, and I think the Inspector General raises, in the ability to use the data we have. And whether it deals with identity theft, whether it deals with the tax cap, is that, I understand that it costs money, but if we do it well and then act on what you learn, it will save money in the long run by helping us to close that tax gap in this case. And so that's a concern that jumps out, is that we're relying on 6-year-old data and the need to make that more current so we can be more effective in how we respond to whatever that data tells us.
Mr. Chairman, if
yes.
I may jump in here, I do think that the IRS is doing what's a rolling research study, and so they're going to be doing 3 years rolled up at a time. So you would be able, even though you may be a bit behind, you would, when 2006 is done, you would do 2007, 2008, and 2009 rolled together, and then you just move 1 year on as you go along. And to the point about how long it really does take, if you have even 2006, some people are filing in October 15th, and you may want those people in your random sample because they may be some complex returns. So you're waiting for those to go through the processing. And then taxpayers have rights. So even those 14,000 audits that we have, they may want to go to appeals before they go to tax court. If they go to tax court, it may take 1.5 years before they're out of tax court. And we have to wait until we're final on the whole issue. And we don't know what's going to be in that 14,000 case sample, whether there are going to be some tax court ones or not. So it's not an easy thing, but I do think that the IRS's proposal about the rolling sample really will work. That will give us, even though we'll have some years of lag, it will give us good data going forward.
Yeah, and I certainly appreciate that some of these cases are going to be very complex, especially those that go into tax court. But again, we don't need the data from all 14,000 to be able to assess,
The risk.
what's working or not. Right. If we lost 4,000, we had 10,000 to look at, but it's 3-year-old data instead of 6-year-old data. That certainly would be more beneficial. Inspector George?
I was just going to add, sir, that there are certain segments of the tax gap that the IRS just hasn't really adequately addressed too. For example, the international tax gap. Our office estimates that's in the hundreds of billions of dollars, again, per year, that is due to the American taxpayer, the Treasury, and it isn't being paid on time, if at all. And so, again, it is an enormous task. As was pointed out, they do need additional resources, but it's something that needs to be addressed.
Yeah, Commissioner Miller, do you want to comment on that? Because I know that's an area where we have in my understanding, the most limited information regarding and what efforts are. And again, I realize that this is an issue of resources. I'm not an appropriator, although I want to look at how we can try to make the case, and the taxpayer advocate well documents the return on investment if we invest in taxpayer services, and what a dramatic return on investment that is compared to enforcement, and how we can try to help promote what your needs are. But when we hear hundreds of billions of dollars that maybe we're not getting in that one category, how can we do better?
So on the international tax gap, I'm not familiar with the Inspector General's numbers, to be honest with you. So I'm not going to speak directly to that. On international, I can say two things. Really, you're not looking at a single number. You're looking at different components. You're looking at, okay, what's cross-border activity of large corporations, and that's one set of documentation that we would look at. And we are doing operational audits there, and we do look at that, and that's our window into that world. The other world is offshore accounts, which, as you may be aware, we've done a remarkably good job in. We have 33,000 people that have come into us in the last 2 years, 3 years, with over $4.4 billion of declared money coming into the Treasury as we go out and attack bank secrecy jurisdictions. Do we know the total number? Do we know the full pie? In either case, probably not. But we're on our way doing good things in both areas.
Yeah, and I don't want to suggest that we're not moving in the right direction, but I think to the American people that are paying their taxes and doing their best to pay, whether it's $5,000 or $3,000 or $10,000, and then when they see numbers that are in, if it was even tens of billions, but it's hundreds of billions that's not being paid, that we need to do a better job out of fairness to those who are complying with the law and paying their fair share. Let me one other question before yielding to the ranking member. One of the issues, Ms. Olson, you talked about is in the current system, we use an electronic system of collection, especially for the withholding of income taxes and employment taxes, and we have a mandatory 94% requirement for IRS in using electronic collection. Can you expound? The way I understood is your suggestion or recommendation is if we applied that same approach to estimated tax payments, it would not just help the taxpayer be more compliant, but ultimately generate more collection if we took that approach?
With estimated, we were very successful once the IRS was given sort of a little nudge, to say achieve this goal in employment taxes in getting electronic payments, which saves the whole government money, obviously because you're not processing checks, but it also makes it easier for the taxpayer after they get used to it, that we should apply that to estimated taxes. I think that in some areas it's very hard for taxpayers to save up money to pay estimated taxes quarterly. So if they can pay it monthly like they pay other bills, and most, they pay lots of bills through their bank accounts, just setting up payments, and we don't have a good interface. And so I think that if we could get some kind of a nudge from Congress that sets a goal, the IRS has always responded well with that and developed a strategy, and then we would get the different parts of Treasury together to make it a really good user interface for the taxpayer.
And is it kind of the same argument on the making it clear that voluntary withholding agreements would achieve, in essence, that same goal?
Yes, and that proposal actually came from some trade associations that met with me that said, for example, the hair salons, they do have an employee like the receptionist, so they're already in the payroll tax system. And the people who cut hair really are independent contractors. They're renting booths from them. But they get in trouble, and then they move on because they don't pay their estimated taxes. And so the hair salon was saying, if we could enter into an agreement where these are not our employees because they're renting and everything, but we're already in the system, we'll withhold a percentage and keep them in compliance. We'll have these people stay with us, and we won't have so much upheaval. And when we've worked with counsel, they've said that we don't have the legal authority to enter into those agreements the way that particular code section is written.
The IRS General Counsel?
Yes, the IRS
their interpretation, they need additional statutory
authority. They need some additional statutory authority. So, and so this really was a user-friendly, taxpayer-friendly proposal.
Something that we're glad to look at as a committee and trying to see if we can work to allow that, because I think it sounds like a win-win for the person who has those independent contractors working in their facility. They don't get the turnover. The independent contractor, it's a more... And
it's not mandatory. It's totally voluntary.
Right.
So.
And ultimately, the taxes are owed or better collected. Yield to the ranking member, Mr. Towns, for the purpose of questions.
Thank you very much, Mr. Chairman. Let me begin with you, General George. Your testimony indicates that the IRS has institutional impediments that prevents them from effectively addressing the tax gap. And of course, you mentioned specifically that even when the IRS examines a tax return that needs improvement, often there's no change made to the return, and this increases the burden on compliant taxpayers. Could you just elaborate on this just a little bit more?
Certainly, Mr. Towns. The IRS, the bottom line is the IRS has incomplete compliance research. And specifically, the IRS does not know all the sources of noncompliance, so the IRS's resources cannot be targeted appropriately. The research which is needed is on the relationship between the taxpayer's burden and compliance, and on the impact on customer service on voluntary compliance. I mean, these are various studies that they may have engaged in the past, but we don't believe they've done so adequately. Additional research is also needed to measure how establishing benchmarks and other measures to assess the effectiveness of some of the efforts that the IRS has engaged in the past, whether something is working or isn't working. So, for example, we know for a fact that when they reach out to a taxpayer by letter, the initial contact normally results in a relatively high response from the taxpayer. That is, the taxpayer will either acknowledge that he or she owes the tax and pay it. And yet, if the IRS delays reaching out to the taxpayer by, and I don't have the exact numbers yet, whether the number of weeks or number of days, we know that the response rate declines. And so, in a recent report, we encouraged the IRS to increase the frequency in which they communicate with taxpayers. And the IRS, to my understanding, has declined to do so. Again, citing resources. But that's just one example. Incomplete compliance strategies, or the IRS's systems that identify returns for examination need improvement to identify potentially non-compliant returns. The collection activity that extends for years has a lower rate of collection for delinquent liabilities. The IRS has something called the Q, which is a database in which tax returns for people who owe taxes which aren't handled by IRS revenue officers or any other method within the IRS, they literally are put in line. And that line contains millions of tax returns. And keep in mind, there is a statute of limitations on when someone has to comply with their tax obligation. So millions of dollars are potentially, and in reality, being lost because the IRS has not simply addressed these returns, had someone assigned to them to look at them. But one of the most disconcerting aspects of all of this is that the IRS has an incomplete document matching program. So the IRS does not have reliable third-party data for taxpayers, for all taxpayer sectors at least, and for all types of tax returns, and most notably income earned by the self-employed. I carry this card with me, and I cite this at every opportunity that I can because this is information that comes from the IRS that is just very compelling. Actually, you heard earlier today, there's a very high correlation between tax compliant and third-party reporting. The IRS estimates individuals whose wages are subject to withholding report 99% of their wages for tax purposes. Self-employed individuals who operate non-farm businesses are estimated to report only 68% of their income for tax purposes. But the most striking number is self-employed individuals who operate businesses on a cash basis are estimated to report only 19% of their income. So there's no question that if the IRS, and again, it would have to have authority from Congress in some of these instances, were able to mandate third-party reporting, the levels of compliance would go up astronomically, I would argue.
Right. Mr. Chairman, I just need a minute to give Mr. Miller an opportunity to respond to some of that.
Thank you, Mr. Towns.
Also, Mr. White, very quickly. Okay, thank you. Thank you.
There's a whole batch that was wrapped into General George's comments. A few things I'd like to clarify. One, our national research program that comes up with the tax gap is also used on an annual basis to improve our filters. So it has a benefit to us to do these things to improve our selection process, because we have a living process that filters back in the results so that we can target better our non-compliance. There's no doubt that we can improve, and we are improving on an annual basis. Other things I'll mention, the queue in the collection area exists, no question about that. Cases go to the queue when they are a lower priority than other cases. Other cases can be a higher priority, one, because we think they're better dollar cases, or two, because we don't have the resources to reach them at this point. We are doing a better job of selecting cases for collection. It's not first in, first out. I want to make that very clear. It is based on the attributes of the given case. Thanks.
Well, let me ask you this very quickly. I appreciate your generosity. You know, have anybody ever estimated or looked at the fact that you indicate you have 35,000 employees who detect identity theft? What would happen if you had 55 or 45? Would the resources increase? You know, I'm not sure that not having more staff is an economical way to go.
So, Mr. Towns, I would agree with you. I think that Nina has said, and others at this table have said, that we believe the IRS is a pretty good investment, and that we are, in essence, the people who bring in $2.4 trillion and in the upper 90 percentile of every dollar that comes into the government on an annual basis. So I think that as we pull people, and we have pulled many people to work on identity theft, as we had to and as we should, that does impact other programs.
Right.
Sir, if I might comment on some of the earlier points from the Inspector General. The IRS does have a project right now that is looking into the impact of service on compliance. My office is working very closely with the Office of Research and with the Wage and Investment Division, and we're doing a lot of surveys of taxpayers. and it will be very interesting what we find out. And this is a constantly developing area. I have been very critical of the IRS's collection strategy and their use of automation and their failure to just pick up the phone and talk to taxpayers, because I think you can really get resolution. But the notice stream, where we send out notices to taxpayers early in the system or in the process, is very effective. But what that leaves us with are those taxpayers who aren't going to willingly come forward, and they need maybe a little nudging, and it's how you do the nudging. The main point I want to talk about is the comment about our incomplete document matching. We have been given some significant tools with the merchant card reporting, but you all just repealed a provision that would have given the IRS more information about the purchases that businesses made. But the upshot, and we really criticized the provision because it imposed so much burden on the businesses who are going to have to do the reporting. And I think that's a trade-off. And in the self-employed area, the way to get information reporting on the self-employed is to get the householder to report on the person who's cutting their grass every week. And you're not going to get that done. You know, that's just not something we can impose on those taxpayers. So that's where you have to do vigorous audits and look at areas of risk, and then, you know, think of some alternative strategies. I'm not convinced that information reporting is the end-all, be-all for this tough area that we've got.
Right. Mr. White, just before you respond, also include in your, whatever your response is, getting back to the third-party reporting. Do you think that IRS is taking full advantage of third-party reporting, and then whatever else you have to add?
All right.
I appreciate it.
Let me start with a quick example that highlights the importance of research. I want to follow up on Mr. Miller's point there. The recently enacted basis reporting requirements for financial transactions, financial securities, that policy proposal was based in significant part on research that was done using the compliance data that IRS develops to estimate the tax gap. And so that's an example of how you can use that data to make changes to reduce the tax gap. It's estimated that the first 7 years of that basis reporting proposal bring in $7 billion. That's a reduction in the tax gap. In terms of information reporting, third-party information reporting, one of the advantages there, as I think has been discussed somewhat, is that IRS can match that information to tax returns rather than having to do an audit. Audits are labor-intensive, very costly for IRS. More importantly, they're very burdensome on taxpayers. So this is an alternative to audits for enforcement processes. The difficulty is in identifying new information reporting sources. There are some that we have raised in recent reports, some additional sources. One is payments for services.
If I can ask you, Mr. Towns, if you don't mind, Mr. Connolly needs to run for a floor statement. If we can kind of come back, let Mr. Connolly get in, and then we're going to come back to those examples of additional sources. Is that okay?
That's fine.
You to the gentleman from
I
Virginia.
thank my colleagues, and forgive me. Mr. Chairman, I would ask unanimous consent that my opening statement be entered into the record in full.
Without objection, so ordered.
I would further request that Colin Kelly, the President of the National Treasury Employees Union's statement prepared for this hearing, also be entered into the record in full.
Without objection, so ordered.
I thank the Chair. Mr. George, you talked about, I think you said a $450 billion tax gap?
Gross, yes.
That's this year?
That's what it's for as of 2006.
2006,
Yes.
and it's growing.
Yes, it is, and I believe it's a low-balled figure. And again, part of the earlier discussion indicated that it's an ongoing review. So, and it doesn't include aspects such as the international tax gap.
Understood. Do you think there could be some relationship between that growing gap and the fact that we've had a 20% reduction since 1995 in revenue officers and revenue agents?
There's no question that if the IRS had additional resources, they would be able to collect additional tax receipts.
I point out to my colleagues, just for the sake of argument, $450 billion in money owed the government we're not collecting. That's what the tax gap is. Correct?
Roughly, I mean.
Times 10 is $4.5 trillion. Now, here we are sweating, can we go big at $4 trillion? sweating a sequestration that would be $1.2 trillion. This would be a big dent in the debt if we simply put the resources into IRS to collect the money that's owed. Now, over and above that, this subcommittee, led by my colleagues, Mr. Platts and Mr. Towns, has done a lot of work on the issue of improper payments. And, Mr. Miller, I think you were covering that in your testimony. What's the estimate of annual improper payments? You know, mistakes get made, refunds get sent to people who really didn't qualify for them, or the amounts are wrong, or whatever it may be. But what's the estimated annual improper payment for IRS?
Just to give two examples under the—
Well, no, is there a global figure? You've got $450 billion as a tax gap. What's the comparable figure for annual improper payments?
Let me respond by saying that I can tell you definitively that under the additional child tax credit, it's estimated at $4.2 billion a year, although the IRS, under an interpretation from Treasury, disputes whether or not that's an actual improper payment. You know, we don't believe, the IG's office, don't believe that Congress, the law, authorizes the payment of the additional child tax credit to people who are not U.S. citizens and who don't have
yeah, but we're trying to deal with global numbers here.
Yes.
And it would be useful to have a number. The total amount estimated for the entire federal government is $125 billion a year.
Yeah, and then, of course, the earned income tax credit, it's estimated about $13 billion a year. But no, I do not have a global number.
Yeah. Our tax gap numbers say that tax credits as part of the underreporting gap are about $28 billion of that 450, or 6% of the gross tax gap.
Okay.
And so that includes a number of refundable tax credits.
All right. Mr. Miller, anything?
So the only thing I would caution is there's a difference between the improper payment, which is what went out that shouldn't have gone out, and the tax gap,
Yes,
which includes all sorts of different people.
I agree with you. I'm making that distinction,
Yes.
which is what I'm trying to get. What is the number for the former?
And I don't have that number. We can come back to the
Be helpful,
subcommittee with that.
because again, if you set a goal of making it zero, understanding that that's probably an impossible task,
It is.
but backing into that, what would be required? What would be required to close that $450 billion gap and to better get our handle on the improper payments? Because, you know, we're making incredible and, in my opinion, sometimes egregious policy decisions that are going to do real damage to the United States of America. We're cutting back on investments that are very important if we're going to stay competitive. And here, right in front of us, is a source of revenue we're owed, except this body is not willing to make the investments in IRS that we need to make. And what is very clear from your testimony is that for every dollar we invest in IRS, especially in terms of compliance, we have a big return without pain and suffering. And it puzzles one why Congress wouldn't seize on that opportunity as one measure to put a real dent in the debt without having to create, you know, weeping and gnashing of teeth. Let me ask a question, Mr. Miller. Oops. If I may, Mr. Chairman, and then I promise. You talked about offshore tax havens. Is that correct?
Yes, sir.
So that's kind of something every ordinary, average American taxpayer has, right?
I hope not, actually.
Well, what percentage of tax filers have offshore accounts?
So we know the ones, and I don't have the percentage with me, but we don't know. We know the ones who are declaring them either under the FBAR rules or under our new rules that call for a checkbox on the 1040. We'll find that out when the 2011 returns fully come in.
And that's a legal loophole in the law that somebody can take advantage of.
It's a permissible act. Obviously, we've made inroads on offshore, and we also have the FATCA rules now that are going to require banks to report to the United States those who have foreign bank accounts.
Can't think of anybody who has those kinds of accounts. Oh, yes, I can think of one. According to one study, the percentage of income paid in taxes for the top 1/10 of 1% of taxpayers in that top bracket has declined from 70 to 40%. And if you look at the middle income quintile, it's increased from 15.9 to 20%. That suggests a rather dramatic regression in taxes paid and the de facto tax code we're living with. Would you comment?
I really wouldn't be able to comment on that.
Well, are those numbers accurate?
I don't know. I'd have to check on those.
Well, would you not agree that if the top 1/10 of 1%, which used to pay 70% of the percentage of income paid in taxes, is now 40%, that's certainly not progress. That's called regression.
So that's outside of what the deputy at the Internal Revenue Service would be speaking about, sir.
Ms. Olson?
Sir, I don't have those numbers. I'd be glad to look into them and get back to you.
Would you agree if those numbers are accurate, that would suggest that the de facto income tax in this country is becoming more regressive, not more progressive, if the top 1/10 of 1% is paying almost half of what it used to pay, and the middle quintile is paying more?
Sir, the reason why it's difficult to answer that question is that I've just been looking at historical data, and it's not clear to me that the highest income taxpayers are paying less than what they might have done historically. So that's why I'm saying I'd need to look at what you're asking me and look at the charts that I've got and be able to answer it for the record.
I have to say to you, Ms. Olson, the numbers available to me are quite clear.
Okay, well,
they're not ambiguous. They've declined significantly in terms of the total percentage of income tax collected by the IRS. Mr. Chairman, I thank you, and I thank you, Mr. Towns, for your indulgence.
Thank the gentleman. And before coming back to Mr. Towns, just would associate myself with the gentleman's comments about the need for us to do a better job of making that investment with the revenue officers to get the return on that investment for American taxpayers. And similar to how we, three of us, work together on the funding levels for Government Accountability Office and advocating to the Appropriations Committee members and staff on the return. I think that, if I remember, there was like $86 for every dollar spent at GAO. Glad to work with you and Mr. Towns or others on something similar that makes the case, and the advocates' numbers really presented pretty well what that return on investment is. So. All right. With that, come back to Mr. Towns, and if it's okay, Mr. White, if you wanted to conclude, you were referencing some examples of additional data collection that would be helpful.
Yeah, this would be additional information reporting. Two things we've recommended in recent reports. One is payments for services to corporations. This is not payments for goods, but this would be purchases of services from contractors, outside contractors who may be incorporated. If you're incorporated, that does not have to be reported to IRS. If you're not incorporated, it does have to be reported to IRS. So one suggestion for additional information reporting there is to extend that to contractors who are incorporated. Payments for services by owners of rental real estate is another area where we've recommended increased reporting. And then there are also cases where reporting is done now, but where additional information could be provided. One example is on reporting on mortgages. Currently, the 1098 forms that report mortgage information do not include the address of the mortgaged property, and that creates problems for IRS in sorting out suspicious returns from correct returns because it's not easy to tell even how many properties somebody owns. So there are both sorts of opportunities there. One other point I'd mention is there's been quite a bit of discussion about return on investment. This is something in our recent work we've highlighted with IRS, the importance of doing more estimates of return on investment, both for proposed initiatives, which the service is now doing, and then after the fact, trying to measure the actual return from investment on compliance initiatives so that the service learns what's been effective, what's been more effective than they thought it would be, what's been less effective than they thought it would be, and that raises then the possibility of redirecting resources to areas to get the biggest bang for the buck.
Yeah, thank you. Okay, Mr. George? Yes.
Mr. Thomas, I beg your indulgence, just to touch on what Mr. White discussed. And throughout this session, we've talked about the need for the IRS to receive additional information, third-party information, and how that would enhance revenue collection.
That's my question, yeah.
But what is just as important is once the IRS receives this information, what it does with it. And that is a problem that we've reported on before, whether it's a 1099 or what have you. The IRS will receive this information from an employer and then will receive a tax return, a return seeking a refund, and won't match the two in time to ensure that the information is accurate. So if someone wants to commit tax fraud, they are able to claim more in a refund than they're entitled to because the IRS didn't, on a timely basis, compare the information. And that is a major problem. Yes, it's resource, derived in terms of their having fewer computer systems or revenue officers, or I'll defer rather to Mr. Miller to address how they handle that internally. But it is a significant problem.
Right. Mr. Miller.
Ms. Towns, I agree with General George that it is a significant problem, and it stems from a number of reasons, the key of which is timing. We don't have the 1099 or the W-2 often when the return comes in for a refund. We do what we can, but under the current systems, we don't have the information to match. We have recently started talking to the community about being more real-time, which has in mind exactly what General George is talking about. The most information we can have at the time of that refund, the better off we will all be. We should have the W-2, we should have the 1099s with respect to that person so that we can validate, one, that it is the person that should be getting the refund, and two, that the amount is correct.
Why can't we get that?
So we receive, many 1099s are due March 30th.
Yeah.
And we already are $70 million into the refund stream by that time.
What changes would have to, this is why we're having this hearing, I mean, to see in terms of what we can correct, I mean, that's the purpose, so what needs to be done?
This is something that my office has proposed several years ago, and we did a study, looked at many different countries around the world. Many countries, and I alluded to this in my testimony a little bit, they don't start the filings, they don't issue refunds until the filing season is closed, and they have received all the returns, and they've had a chance, including information returns, and they've had a chance to run everything against, and do matching, and then they issue the refunds. Now, in the United States, people are showing up the first week of January to file their returns to get a refund, and it would mean a major shock to the system. I do understand. I understand that some of the payroll processing companies have said that if all we needed was gross wages and withholding, that on the W-2s, they could basically provide us that information within the first couple of weeks of January. It's all the information classifying, non-taxable health insurance and retirement plans. That's what takes a little bit longer for them to process. So I think that, the IRS is looking, and as Commissioner Miller said, we're engaging in conversations now with the information reporting sector to see what we can get early. I could also tell you that Australia took a very interesting approach, sort of what United States is doing. They sat down with many of their partners, like the major banks and some of the major employers, and they said, what information can you get us very quickly? And people voluntarily came in and said, we can get you this very quickly. And then they told the taxpayers, if you wait until this date, filing season starts here, but if you wait until this date, you can go online and you can see the information that we have, so you can be sure about what you get. So they voluntarily asked taxpayers to sort of wait in the filing season. And because they had a pre-filled return so that taxpayers could just sort of download that information and fill in the rest of the stuff, it was viewed as a very positive thing. Now, they're really getting about about 40% of their taxpayers are actually waiting and using the information that the agency is getting voluntarily. And they're getting to the point where they might be able to say, okay, now we're changing deadlines because we're seeing people move to later in the filing season. And that's the approach that we've recommended. Use it voluntarily. Make it as a desirable thing. Taxpayers will wait because they want the certainty. Negotiate with your partners like the IRS is beginning to do. And rather than bringing a huge shock to the system where taxpayers are really desperately waiting for their refunds up early.
Mr. White.
Just to add a little bit to this, a few other considerations. In addition to the burden on the third parties of changing the filing date for the information returns, there does need to be enough time allowed for them to ensure that those information returns are accurate. If they're not accurate, if they have errors in them, then they're much less useful for IRS because it means they're finding false positives and at that point contacting taxpayers about a mismatch when there may not be a true mismatch. One other point about the value of this kind of information return matching early on before refunds are issued is that it would, to some extent, be a long-term solution or at least a partial solution to the ID theft problem. IRS would be able to do more verification before issuing refunds to detect illegitimate claims.
You mentioned, and this is it for me, Mr. Chairman, you mentioned in terms of statute of limitation, there's no statute of limitation on fraud.
That is correct.
Okay.
But proving the fraud, I mean, it's which comes first? I mean, so it's in the queue. If it's there for 5 years, and I believe that's the statute of limitations for it, for someone having to pay their tax obligation. If the IRS hasn't gotten to it, it's out of the queue. That's my understanding, and you can correct me if I'm wrong, Commissioner. But and so if they haven't proven it by then, how do they know it was fraudulent?
And much of the tax gap is not in that queue. There are significant parts of the tax gap that IRS doesn't detect in the sense of identifying the particular taxpayers that owe that amount. One of the issues here is that a significant portion of the tax gap is in very small amounts of money spread over millions of taxpayers. There are a lot of small businesses that have reporting problems, both intentional and unintentional. They're small. By definition, the tax liabilities there are small, and it raises a question of whether it's worth going after them, because to find the unpaid taxes, in many cases, you'd have to audit them. And then another question is how intrusive you want the tax system to be to find those relatively small amounts spread over, again, millions of taxpayers.
So if I could, just one correction to General George. There's a 10-year statute for us to collect the money. And actually, I think I would agree that the older and colder the debt, the less likely it is we're going to collect it. It's just like any other debt. But we do have offsets that occur constantly, and we have other liens and other tools that do make use of that data, and those accounts are collected on.
Something that Mr. White said, there are things other than direct enforcement that are very valuable tools. Commissioner Miller mentioned the refund offsets. A large percentage of collection occurs because a taxpayer has a debt with us, but they're also getting a refund in a future year. And that's just the computer seeing the refund and grabbing it, and it goes into the public treasury. But another thing that the IRS is doing this year is some behavior modification, if you will. We had recommended several years ago on the sole proprietorship return that you break out the lines for reporting income, where you say, here's income from 1099s that's reported on 1099s filed to me, and here's other income. And I just know as a former return preparer that my clients would come in and they'd just show me their 1099 income. And I'd say, well, clearly, I'm not going to audit your books, but clearly you have more money than this that you earned, that you brought in. And they go, oh, yeah, $100 or something. Well, if you force taxpayers to have to articulate They're going to look at, they've put all their money under the 1099, and they're going to think, oh, the IRS is going to audit me if I don't report some money on this other line, the non-1099 income. And so suddenly you disappear. Even if people were now reporting $100 and they go up to $1,000, that's $900 per taxpayer, and that's a lot of money. And so we've used that in the past, little behavioral modifications that drive people to a little bit more compliant behavior because they think we're looking at them. And that's a very important tool. That's really the policy behind information reporting, but you don't just need it for a third party. You could do it through what they have to report on their returns.
Thank you, Mr. Chairman, for your generosity.
Yeah, gentlemen is more than welcome. I want to turn the discussion a little more towards specifically identity theft and the issue that the ranking member and I have focused a lot of time on with our staff and both sides with the subcommittee staff. Certainly want to commend the IRS for increased focus on this issue, and it's certainly a necessity as we see the numbers going up each year of those who are seeking to defraud the American people through identity theft related to tax refunds. I know one of the issues is the taxpayer protection units that have been established. As somebody who's been a victim of identity theft or believes they have, to have a designated unit, I think that's an important step. But I will tell you, one of the things that jumped out to me, and it was in the taxpayer advocate's testimony, that is just unacceptable, is how I'd say it, is the level of service numbers. And understand that in general, the goal this year was about 60+% level of service. And yet when the taxpayer protection unit level of service in mid-March was under 12%, and even in this past week, in the kind of the heaviest time, was only at 35%. And I look at that as saying, we're going to create a special unit for those who have been victimized, and I emphasize victimized by criminals because of identity theft. And we set up a special unit for them to call, and we're only helping not even 2/3 when we have the highest level of assistance dedicated to their assistance. And even those who do get through to get assistance, according to the advocate's testimony, the average wait on hold was 1 hour and 6 minutes. That is not how we should be treating victims. And it goes to our previous discussions here that we need to recognize this for what it is. It's a crime, and there is a victim of the crime. And that we set up a special unit is a good thing. But if the unit can't deliver to help the victims, that's not a good thing. And so dropping to 60% level of service overall is of concern. But dropping to 12% for those that are supposed to help those who have been victimized, and even those who got help had to wait over an hour on hold. Anybody in this room enjoy being on hold for over an hour? I don't think so. I'm amazed that anybody stayed on hold for over an hour, quite frankly. That is just not acceptable. That is not how you treat a victim of a crime. So I want to recognize that you're trying to do the right thing here, but we are far from where we need to be.
Chairman Platts, just to make a clarification, the unit that number went to is different from the unit where taxpayers who think that they've been identity theft victims calls the IRS out of the blue. The unit that those statistics go to are a unit where the IRS has sent taxpayers letters and said, we think there's a question about your return, and we're not going to hold it. So I just wanted to make that distinction.
Yeah, absolutely. And if I didn't make that clear, but where there's a belief that there's identity theft here, and so we set up a special unit for them then to respond, and then we put them on hold for an hour if they get through, and as the numbers show, the overwhelming majority do not.
I agree, Mr. Chairman. I was unaware of the 35%. I was aware of the earlier problems, and I thought we had resolved that and added, well, I know we have added more staffing, and maybe we've not added enough.
Yep.
Not only do they not have adequate staffing and extended wait times, if someone calls back to find out what the status is of their case, they're assigned to someone who may not have seen the case before. They're not handed to the same person who has the institutional knowledge of their case. In addition, in times such as recently with the tax filing deadline, people who are normally assigned to those types of cases are reassigned to answering regular tax concerns from taxpayers who dial the 800 number or who walk into taxpayer assistance centers. So there is a way that the IRS could certainly run this system a lot better than it is.
Well, and General George, you raise, I think, an important point, and whether the IRS has looked at this in the past or not, especially when you set up that special unit to respond to, specifically, is certainly at a fraction of the numbers here. But I will equate it to my office or Ranking Member Townsend's office. We open about over 4,000 new constituent cases a year as an office, and that is individuals. Now, if somebody calls in and the person they're working with is not in, another member of my staff can pull up their case to see if there's been anything updated in it since they had last talked to the staffers. But there is a dedicated staff person that they are working with, and that does make a huge difference than having to start over. And so I don't know if that's anything that IRS has looked at doing, so that when you call in, that once you make that contact, that you then have, all right, here's your case manager that you should be dealing with, so you're not starting over and kind of having to re-educate every time you call in. Is that something considered?
So it is considered, and I don't know whether it would work here or not, to be honest with you. Generally, and I think that the taxpayer advocate and I may disagree on this, we don't necessarily have the resources to say this is your person. What we ought to be doing is to ensure whoever does get on the phone with you has all the information in front of them, and that's what we try to do.
And is that done through the case files electronically, that whoever helps you, that them well documenting?
That's our attempt. Our attempt is to have, and remember, we're talking about, this is a microcosm of the way we're doing business on the phone generally, where we can't necessarily, our systems do not permit a single person. We don't believe it's the most efficient way to do it, and we can't do a single number to a single person at this point. So we are looking at it. In a perfect world, yes, I'd have an individual who is assigned to my account, and we've not been able to get there in terms of resources or systems to date.
All I know is that not just in identity theft, but in correspondence exam and in automated collection, some of the most significant and frequent complaints we get are taxpayers saying, I've talked to 4 different people, I've had to explain my situation over and over again for each one. I've looked personally at some of the notes that people take, and you can't read, you cannot build a story from the notes. You don't know what the person before you did. And to Mr. White's point, this is where you go into the return on investment, to do the analysis to say, by saving pennies, by having anybody answer the phone, whoever's the next available person, are you really saving money downstream where you get the wrong result and the taxpayer keeps calling back, and then you go to a taxpayer advocate service where you have 2 employees working the case, mine and the IRS employee, or you go to appeals, which is a higher graded employer, you go to tax court where you've got the lawyers and the paralegals and the tax court personnel involved, and can we really do a good return on investment on that and say, no, you're not saving money.
And when you add to that the data that's been shared here today, that we know that our best chance of eliminating the tax gap is the voluntary compliance. So the person who's calling in is trying to figure out what's up. I was using an example of the victim calling in because they've been defrauded or victimized, but for anybody calling in, the fact that they're calling in is a good thing. They're trying to resolve their case. So we want to get them the assistance they need, and the data shows that. And that goes to that issue of taxpayer services, the return on investment versus enforcement, and so I think it is a penny saved and a pound lost. I mean, it doesn't seem to be a well thought out approach. Let me, in an issue where I want to acknowledge what I think is a very positive step in the area of identity theft, if I understand this correctly, and this was something we raised in the first hearing on identity theft last June, I guess it was, and that is somebody files a return fraudulently, the legitimate taxpayer then submits their return, finds out, hey, somebody already filed and got a $4,000 refund, and it's going to take a while for us to work through. But even when that happens, and we're working on shortening that time frame for the victim to be made whole, that in the past the victim couldn't get any information about the fraudulent conduct, even though it was submitted in their name, their Social Security number. Is I understand that your General Counsel has issued an opinion now that says the legitimate taxpayer has a right to that information of the fraudulent material that was submitted, and then can authorize, I want that information, and I want to be able to share it with law enforcement. Because I'll use the example of a couple of the citizens who testified last year. I guarantee you, if they had been given a year ago the information, they probably would have gone to New York with the information, gone to the NYPD and said, listen, here's where the check went, here's the bank, let's go get the photos, the photos from the bank that will show who came in and collected that money, if they had that information. And at that point, they were being told no. But is that correct, that it's been changed, that they have a right to that information?
So it is correct, Mr. Chairman, that we have the opinion of counsel that we can share that information. It will require, and what we're doing as we speak, we're rolling out a pilot with some local law enforcement. The real issue is we cannot share this information with local law enforcement.
But the taxpayer can authorize it to be shared, right?
The taxpayer can authorize through a waiver for it to be shared, and we're rolling that out as we speak.
That's great to hear. And using the cases of Tampa and local law enforcement in Florida, if the legitimate taxpayer can say, hey, I want to work with the local police, give them everything you have, I think that's going to be an important step, because I understand when we're talking about an average of, I think, $3,500 or $4,000 as the fraudulent return or refund, that from a prioritization of resources, the cost of, at the national level, trying to go after those. But the local guys, that's what they do every day. That's what my local police are helping citizens every day, is those smaller types of crimes or fraudulent conduct. So I think that's a very positive step. And while I'm very displeased with the level of service on the TPU, the Taxpayer Protection Unit, I do want to recognize that's a very important step in the right direction. Maybe two other issues here before we wrap up, and I appreciate all of our witnesses' patience. The issue of the Social Security Death Master List, and the fact that that's pretty much an open game for fraudulent conduct, or those who want to commit fraudulent conduct. I know the IRS would, I believe the position is to restrict access to that. Is that correct, that you would like legislative action to restrict who can access that information?
So I think we are working with the Social Security Administration and the administration more generally on legislation that would do that.
So that's an ongoing effort, but so not ready yet to say, here's what we think is the right approach within the administration?
I think that's right. I think that your question would be very well answered to go to SSA and have that discussion, because I think they are actively engaged and talking to people about it as we speak.
It's something that we want to look at of how to do that, because to me that the fact that that information is too freely shared, sometimes for legitimate purposes shared, but is just too big a target for those who are committing the identity theft. Mm-hmm. So, the other final issue is more of a broad issue, and that is the balance, and if any of the four of you would like to comment, when it comes to the fraudulent, and this goes to the issue of the timing of matching documentation with returns. I know it's a balance between a quick refund, which those who are entitled to refunds want it to be as quick as they can, although I also say that most taxpayers don't have to wait for a refund if they wanted to adjust their filings, and get the money in their paycheck. So they could get an instantaneous refund every paycheck rather than one lump sum. Human nature, Ms. Olson, you talked about human nature and behavioral management. I'll admit I'm one that it's kind of a forced savings, and I'd rather get $1,000 back than have to write a check for $1,000. It's I think a mental psyche, of how you look at it. So, but it is a choice that every taxpayer has to try to ensure that they don't have to get a refund. In fact, if they want, They can owe money and actually come out ahead because they had the money and then write a lump sum check. But given that, how do we balance that quick refund, though, against the risk and that we're not able to match? And is there, today with electronic filings, as the use of electronic filings more and more the norm, more and more the norm also is the ability to, that typical home individual doesn't just have a computer, but they have a printer that's also a scanner. I mean, that's the norm with printers today. If you buy a printer today, it can scan, fax, and print. Have you looked at saying if you want to file electronically, and maybe it's not all refunds, or maybe it's a pilot to look at, but you have to scan in your W-2s. And so, rather than waiting for anything to be mailed in or match up from the third party, if you want an electronic return, you scan in your W-2. So when you electronically submit, and especially when it's paid tax preparers, what's the percentage, Commissioner Miller? Is it like 65% or higher that use paid?
It's above 60, yes. In that range.
60 plus. I mean, for those, it would especially be, I guarantee you, if you're a paid, provider, your ability to scan a document is a given. Is that something that we should consider?
So if I could start out, a couple of things. I think two separate points altogether, which is enforced savings. I think it's absolutely true for you and I. I think it's less true as you go down the income scale, where you have the earned income tax credit that people,
agreed.
That maybe 1/3 of people float in and out of on an annual basis. It's a changing circumstance, and for those individuals,
I think that's a very relevant point.
On the second piece, I think we should look at everything we possibly can, and we need to get better at our screening. We need to get as much information as fast as we can to apply it to refunds as they come in. On the scanning item, we certainly should look at it. I think at this point, to be honest with you, we still get a lot of paper fraud in, and they have dummied up W-2s. And so I'm not sure that in and of itself, it may be a piece of a larger strategy and is absolutely worth looking at, but I'm not sure in and of itself that will be a game changer for us.
Mr. White?
I agree. I had the same concern about the scanning, that the ID thieves are making up W-2s. And so getting one from the taxpayer doesn't guarantee that it's legitimate. What you need to do is get the information returns, the W-2s from the employers faster, and that's where technology may help. That a lot of the deadlines that Mr. Miller mentioned earlier for due dates for those information returns were set many years ago, and with more modern technology, it may be possible for third parties for at least certain kinds of information returns to submit them much earlier in the filing season so that they could be matched to returns. Now, there's some other things that need to be in place to make this work as well. IRS is modernizing its information systems, but obviously you need systems in place that can handle massive amounts of data. IRS gets billions of information returns each year. So you're talking about a lot of information that you'd have to match very quickly so that you are not making taxpayers wait for refunds.
Mr. Chairman, I would note, though, certain software tax packages, TurboTax being one, do allow for people to download their W-2s electronically. So that it does exist. But again, you're right. It's $65 to purchase that package, and some people just don't want to make that expense.
We've thought a lot about behavioral modification. I think that the demise of refund anticipation loans has, what refund anticipation loans did was tell taxpayers you can get your dollars tomorrow. And so suddenly the IRS getting you money through direct deposit and electronic filing within 10 days looked like an enormously long time. And I think we have to really think hard about messaging and communicating with taxpayers to talk to them about what's the reality of the filing season, and that they actually really do want us to do these refund screens, and that the first year it may be hard because you're depending on this money like you have always, but if you can adjust your behavior, then you can depend on it in the future at the same time every year. The lower income really use this for paying their heating bills, for paying, putting it down. The studies show that they use it for things like buying refrigerators, buying school clothes, stuff like that. So I think we have to work with a larger community to get people used to it, but I think the IRS has to step up to that plate and really change expectations and behavior.
And Ms. Childs, I have just two final questions I'm going to wrap up with and then conclude. Two final questions related here. One is with the information that's provided, with the push on certified tax preparers that you're moving forward with, when there's a professional tax preparer, paid tax preparer, do they have to certify? I know they sign, that they're prepare the document, the return, but do they have to certify in some way that they've seen, like the W-2s or the supporting documentation? Is there an affirmation they have to make?
So I don't think the signature means that, Mr. Chairman. I can come back to you on a more detailed discussion of under Circular 230. What exactly are they signing when they sign the return? But the due diligence that they are required to do, I think, is at a broader level than that. But I can come back to you with a more specific answer on that.
That'd be great. And final is just in looking again at conduct and the type of fraud. Are we able today, when we talked last year was about the issue of debit cards and what percentage of identity theft fraud is paid out on debit cards versus a deposit into a bank account, because of the ability that, for a criminal that they have to go in and access money in a bank account, there's a much more of a trail to be followed if we're going to pursue the criminal conduct, different than with a debit card.
And I think I'll have to come back to you with that as well. I think we have seen an increase in the use of debit cards, and you're quite right. There are pluses and minuses to that.
I think that goes to the broader issue of assessment of the information, that we have. And if we're identifying, say, there's 400,000 possible cases or actual cases of identity theft that were identified and stopped, what percentage of those we're asking for refunds on debit cards, and as to should we be issuing debit cards?
I'm not sure we'd know that.
Well, that's what I'm getting after. Is I think we need to know that to be able to.
But I think that the debit card has an account that is the same as a bank
that,
account, and
again,
we wouldn't.
The financial management services, who actually are part of Treasury that's making the payment, it sees an account number. It does not know, I don't believe, whether it's a debit card or a bank account. That would be something that was known by the software providers. And those are discussions that are ongoing, because I agree we need to get
because when you hear the testimony or the information from, like in Tampa, where they go in and a former drug dealer, they go in and they have 50 debit cards with $4,000 in each of them that were fraudulent returns, it seems like some evidence that the criminals who are organized criminals doing this are using that method more likely than any other method. So again, it's a data analysis is what I'm after.
Right. And I'd make one other point, because there's no doubt that we're seeing the same story as you are, where there are rows of debit cards. I want to make it clear, it's not, if we have stopped the refund, the criminal will still have its debit card. He or she will have a debit card. There will be nothing loaded on it. And when he or she goes to load, there will be nothing there, because it will have been stopped either by us or, frankly, by the debit card company, because it's finding fraud as well. Those stacks, I'm sure some of them have money, don't get me wrong, but it shouldn't be assumed that they all have money on them.
Yeah. I'm going to a final comment and then need to wrap up. On the issue of identity theft is I want to just reemphasize that this is about victims, legitimate taxpayers who are victimized by criminals, and there's maybe no more egregious example of what I heard reported this week of a fallen hero of this nation who gave his life in defense of the nation, and then when his parents come to learn that not only they lose their son, but their deceased son who gave his life in defense of this nation was victimized by identity theft related to taxpayer refund. That just epitomizes the type of victimization that's occurring, and we need to do right by that family and by every individual or family out there, that those legitimate hardworking, law-abiding citizens, are not victimized, and if and when they are, that we prioritize them. And so I know we can do a lot better in that regard. I want to thank each of you for your testimony, your patience here, especially with the break, with the floor votes. Thank the ranking member. And as hopefully came through, we're not about gotcha. We're about trying to just work through this issue with you, and how can we help? And whether it's the issue of adequate funding for the resources to make that return on investment that we invest in the end, the taxpayers come out ahead, whether it be on legislative authority that you don't have that we need to provide. But on all aspects, we want to work with each and every one of you in your offices. So, General George, did you have a final comment?
I just wanted to clarify one thing in response to Mr. Townsend's question about the statute of limitations. Mr. Miller was correct in terms of its 10 years to collect. There is no statute of limitations on fraud if it's a willful fraud, but there is a 3-year statute of limitations on the IRS's ability to conduct examinations on tax returns. So there's something that needs to be clarified here.
Appreciate the
overall issue.
Clarification. Mr. Townsend, do you want to make a closing remark?
Actually, I want to associate myself with your remarks and thank the witnesses for being here, and to say that if there's something that we need to do on this side, feel free to let us know, because I just think there's some areas there that needs to be dealt with, and that and I think that working together we can deal with it, and I think that thank you very much, Mr. Chairman, for this hearing.
Again, we'll have the record open for 7 days for some of that extraneous materials or response to some of the questions. Appreciate our witnesses' testimony, and this hearing stands adjourned. So, thanks for your patience while I work through those questions. Yeah.